And that is that Bitcoin is a risk-on asset, but it is a risk-off asset as well. And if there are going to be bankruptcy problems out there, then having a vehicle with no counterparty risk in a portfolio will become more and more important over time. And we took our first position, giving our clients exposure to Bitcoin in September of 2015, when Bitcoin was roughly $250. And it was really interesting at that time. We had been around for roughly a year, a little more than a year as a firm. And when we put Bitcoin in the portfolio, I remember the media, some people in the media were saying, oh, well, that's great. They're just trying to get attention. This is a great marketing gimmick. And that's when I realized, oh my gosh, this could be even bigger than we think. People are making fun of us. And so there began our journey, and we've been there ever since. And I can tell you our conviction has never been higher.
Cathie would made her initial foray into Bitcoin investment in 2015, when the cryptocurrency was valued at a mere $250 per coin. As one of the pioneering institutional investors, Cathie recognized the potential early on. Despite the almost decade-long holding period since then, she expresses her unwavering confidence in Bitcoin, stating that her conviction has never been stronger than it is now. In 2023, Cathie emphasizes that Bitcoin has undergone a significant transformation. No longer viewed solely as a risk-on asset, it has evolved into a risk-off asset, offering long-term wealth protection. Beyond safeguarding against counterparty risk, Bitcoin is now seen as a hedge against inflation and the devaluation of the dollar. Stay tuned until the end of the video, where Cathie, alongside her lead Bitcoin analyst Yassine Elmandjra, delves into the reasons behind their heightened conviction in Bitcoin. They discuss why more than 75% of the Bitcoin supply is held by long-term investors, shedding light on the enduring appeal of the cryptocurrency.
My history with Bitcoin goes back to 2011, before we started ARK. Brett Winton and I were at another firm, and we were talking about this curiosity called Bitcoin during our research meetings. And then when I founded ARK in 2014, Brett joined me, and we decided not to split the next generation internet, which was a big theme of ours, into what has become Bitcoin, crypto assets, digital assets generally, and artificial intelligence. But when we understood in 2014 and 15, as we did our first white paper, how big this was going to be, and we really learned it with Art Laffer, who's been my mentor throughout the years from an economics point of view. He's a good friend. And I just wanted to share this concept with him. And then when he found out what it really was, he did want to collaborate on the paper with us. And so our first white paper was in 2015. And we took our first position, giving our clients exposure to Bitcoin in September of 2015, when Bitcoin was roughly $250. And it was really interesting at that time. We had been around for roughly a year, a little more than a year as a firm. And when we put Bitcoin in the portfolio, I remember the media, some people in the media were saying, oh, well, that's great. They're just trying to get attention. This is a great marketing gimmick. And that's when I realized, oh my gosh, this could be even bigger than we think. People are making fun of us. And so there began our journey, and we've been there ever since. And I can tell you our conviction has never been higher. Yes, when we took our first position, it got a lot of publicity, and it was highly criticized, especially from other asset management firms, I would say. And so we were watching Bitcoin like a hawk, and there was the European sovereign debt crisis threatening to rear its ugly head again. And so we were watching what happened to the Bitcoin price as the markets elsewhere, whether they're the sovereign wealth bonds or the stock markets themselves, were imploding at times. And Bitcoin was inching up, and we thought, oh, that's so interesting. And we began to think, okay, could Bitcoin be not only a risk-on asset, but a risk-off asset. And it's the first time that I remember saying, this could be a hedge against counterparty risk in an implosion of the financial ecosystem. And it was acting that way. So most people, as they were being introduced to Bitcoin, were introduced to it as an inflation hedge, a hedge against inflation. We were looking at the sovereign debt crisis and saying, wow, it's behaving very interesting. This is the threat of deflation, and it's doing very well. And then, of course, we had the regional bank crisis this year. And lo and behold, it was especially after 2022, where we had Terra Luna, Celsius, Three Arrows, FTX, basically going under. And here, as the regional bank index in the United States was imploding, actually, Bitcoin went up 50%. And then we said, aha, there was a trace of this back during the 2015 time period. But this was, hey, Bitcoin, now we know, is not only a risk-on asset and does very well typically as some other markets are doing well, but it charts its own course. And it is also a risk-off asset. How many assets are there like that out there? So big aha moment last year. To help people understand, first of all, what were we saying about FTX and all of the bad news last year? We basically said, this is proving the point, the reason Bitcoin is important. FTX was completely centralized, completely opaque, and it turns out completely fraudulent, right? And what do we have in Bitcoin? It is completely decentralized, completely transparent by digital wallet address, and basically a giant neighborhood watch system, because there are so many people watching now, people whose livelihoods depend on this, not just in the developed world, but especially in the emerging markets. So it helped us prove the point. And then on deflation, what was that point? Well, there is no counterparty risk with this transparent, decentralized ecosystem. Unlike our banking system circa 0809, counterparty risk was the reason the financial markets seized up and were paralyzed, and why the financial authorities and fiscal authorities had to come to the rescue. That will not happen with Bitcoin.
I think, you have the Bitcoin spot ETF approval, you have institutional acceptance, you obviously have the Bitcoin halving, and maybe we can end on that note. This Bitcoin halving, which is a scheduled event that occurs approximately every 4 years, is expected to occur in April of this year. And I think it's quite a provocative event in that it reinforces Bitcoin's scarcity, and that it is effectively the most predictable monetary system relative to its monetary policy the world has ever seen.
So just to get to help explain that a little bit, the halving means the rate of growth in supply is going to be cut in half. Is it to 0.4 or 0.5%?
So reduced from about 1.8% to 0.9%. So just under 1% inflation
per year.
That's right.
Which means if you compare this to gold supply has increased on average roughly 1% per year. Bitcoin's supply growth is going to drop below that, we believe, this year.
And then maybe to wrap it up, I think what's a really interesting dynamic that we haven't seen in previous market cycles is the buyer and seller behavior broadly is much more long-term focused than it's ever been. This chart, it shows the chart of total long-term holder supply overlaid by Bitcoin's price. which now stands at around 15 million, or 76% of Bitcoin circulating supply. So in other words, we're basically saying that 76% of Bitcoin supply are held by long-term holders. This suggests that that 76% is locked in a way that you're not going to see marginal demand be absorbed by this supply. The supply is relatively finite relative to what we've seen in previous market cycles. It's interesting to note here as well that in market tops, or in really bull markets, we see a decline in that long-term holder supply, largely because long-term holders are taking profits. Here we have yet to see that decline, which again denotes that, despite being up, several 100% in a year to date or in 2023, that we're still likely not in sort of the euphoria territory, and that this might actually be just the beginnings of a bull market if we were to look at long-term holder supply as a proxy for risk on versus risk off narrative.
The thing that strikes me about this is just to, you said it, 75% of the outstanding supply of Bitcoin is in the hands of long-term holders, and I think what that means is this: they've held it, have not moved it in about a year.
That's
or
right. It's about a little over 6 months. The year supply, that's about 56% of total supply has not been moved in over a year. But we used heuristics where that 6 month threshold tends to be the long-term versus short-term demarcation.
So there, I'm just looking at the number here, about 15 million of the Bitcoin supply out of 19.5 million outstanding is in the hands of strong holders. And we know that the total supply ever is going only to 21 million. So to pry it out of the hands of these long-term holders, now that institutions are going to be given, we believe, the green light by the SEC we hope and believe the next week, the price that they're going to demand, now that this asset is so scarce, and the push in from institutions, it won't happen all at once right away. There are lots of boxes to check and so forth. But I think the long-term holders understand there's a big buyer on the way here.
ARK Invest, led by Cathie Wood, and its head Bitcoin analyst, Yassine Elmandjra, share their compelling conviction in Bitcoin. Cathie's journey with the cryptocurrency began when it was priced at a mere $250. Her invaluable insights provide a crucial perspective for anyone venturing into the volatile crypto landscape, offering guidance on navigating its unpredictable waters. In this discussion, Cathie and Yassine shed light on the evolution of Bitcoin, emphasizing its transformative journey from a modest valuation to becoming a key player in the financial landscape. Their high confidence in Bitcoin is rooted in its enduring appeal and resilience, making it a noteworthy asset for long-term investors seeking stability and growth. As pioneers in the field, ARK Invest's perspective, especially Cathie Wood's first-hand experience and Yassine Elmandjra's expert analysis, presents a compelling narrative for those interested in understanding the intricacies and potential of Bitcoin within the dynamic cryptocurrency market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.